Hi, thanks for tuning in. This is a weekend review for the week ending August 26, 2022. We're looking at a weekly chart of the S&P 500. We got the rejection off the 40 that we were looking for. I trimmed half my positions up here, still holding on to the other half. I want to see what happens at this confluence of the 20 and the 10. We got the ADX at the trough, like I called out. I said one of two things is going to happen. They're either going to pull back and ADX will go up, or they'll go sideways, build energy. ADX will coil down here, kind of like back here, and then continue higher. This particular instance, they did the gap and go. We got the weekly reversal here. We have a pullback. We are looking for a weekly higher low. Again, the long-term monthlies are down, but the weeklies are up. What do I mean by that? Here's a low, here's a high, here's a low, here's a high. Are they going to go break this low and set something like this up and come all the way down here? Got 3 days left in the month. We're going to find out real quick what this monthly candle is going to look like. Ideally, the bulls want to see it close above 411 by Wednesday. We'll have to just watch and see how that plays out. Now we zoom into the daily, and this is where things get a lot more bearish. Outside this channel, back inside the channel, not a good look. You do have one thing in the bull count here is this PPO high is not a divergent. It's just a high, and it's higher than this high here. And so again, pull back to the 40 looks kind of normal for now. But when we put up the levels that matter from a structure standpoint, you have this pivot here, right? Now we have a second pivot. And if, one thing we do all the time here are these little channels. So if we draw a channel, right, and we assume either this is an ABC like we've talked about, or this is an impulse wave like we've talked about, and this being wave 4. So look, we don't have enough data yet. I know this is hard for everyone. But what I will say is this pivot at 392.94 is very important. The rising 40, very important. Pullback to 0 was to be expected. And the structure here is starting to look more like a zigzag. But again, too much guessing, right? All I can do is say, look, we got the 510 bear cross that I talk about all the time, right? We have this fake breakout. Let's get all these channels out of here. We hit this level. I'd say this is the channel that matters most right now. This pivot and this pivot are clearly the most important pivots. And so it gives us that. You could also do one like this. But again, that doesn't make any sense because it overshot. That's not a channel. This is really just a trend line. So when I look at this, I'd say, well, that was definitely damaging. Friday's close was definitely damaging to the trends. We don't have a 10-20 bear cross yet. And we're still above a rising 40. And so what you're getting is this battle between the 200 and the 40. And if you go look around, we're going to see this on pretty much every chart. In some cases, the laggards like QQQ and SMH, which have been lagging all year, are already below the 40. And the leaders, IWM and SPY, are above the 40. Right? And this isn't exactly bearish. I would expect the weakest names, IWM, to be up and down the most, right? It's really a leveraged form of equity risk. And you'll see that when we go look at the line charts of all the different sectors and what they look like month to date, which we'll end on. But yeah, still above this 188, very, very, very important. This is an outside bearish reversal. It is telling me to zoom out. And you're definitely getting, hold on, this is too much. Can't see anything. You got to get everything off the chart. You're definitely getting that rejection at the 40 look. But I want to point out that ADX has not gone up as price has gone down. It's doing this coil thing here. And when it does that, it's generally changing trend. But again, ADX is just telling us, is there a trend or is there no trend? That's all we're using this tool for. Is this confirming that there's a trend or is this confirming that there's no trend? And what it's telling me right now is there is no trend. Up or down, no trend. And the trend on the daily, 50 ADX reading is very high, just like this down move we had back in January. That was a very, very high reading, and that was not the end. Right? So when you get these high move, like this high reading, and then you get something that looks like this, an impulse wave, you start to make the channel. And you get this same look that we had on SPY. And so again, I can't be bearish, right? While these things are in weekly uptrends. High, higher low, higher high, searching for the higher low. Anything above 183 is fine. And they'll likely play defense. And again, 189.16. 188. So closing below this low opens up this low here at 184. 184 is likely where price is coming this week. And, possibly even down here to confirm that the 200 is in fact still demand. All right. There's nothing wrong with this chart yet. And that's really the story for the week. There's too many subjective counts at this point for me to put any weight in either of them. Right? I can sit here and say, hey, look, it's perfect. Here's our ABC. Boom. It's the zigzag. It's perfect. It's the lightning bolt. I see it. We got back above the 618. Boom. As long as they stay above 177, man, what's the big deal? And I could say, well, ADX isn't confirming, and PPO's coming back to the zero line, could get rejected and then head all the way back down for another one of these big moves. And this is just, price reverting to the mean in a downtrend. I could easily make that claim. And then we could zoom out and say, well, what downtrend? This is a long-term monthly uptrend. Well, we're in a monthly downtrend. The short-term monthly trend is down, but the long-term monthly trend is, you see how exhausting this is, right? And am I going to use any of that data to generate buy-sell signals? The answer is I don't. So, my buy-sell signals, for the most part, are these 510 crosses that you see. This 510, this 1020. It means that I sit through more volatility, right? I don't just look to see, hey, did price close below it? Like it did here, recaptured the next day, kept going. I try to wait and see. I'd like to see this momentum curl down, get back to zero, and get another move higher. Kind of like happened back here. The start of this down move, revert to zero, another move lower, right? Corrective up, another move lower. Now, you've got the divergent that we had here with this low, right? So that's what we wanted to see with this major low, just like we had the divergent high back here. And the momentum that was set from that November high was eclipsed on this move. There's definitely no doubt about it. There's still a breadth thrust that happened. And the implications, they're just hard to tell. I mean, I know you can go look at the studies and they'll give you exactly what it means. but history isn't the same every time. So it's just a guess, right? All right, that's enough of the rambling. We'll take a look here at bonds, right? So we just wrapped up, again, QQQ, SMH are the laggards. I'm not interested. Just not interested. I got to play SPY, got to play IWM if I'm going to play the equities. And the bonds are starting to wake up. Again, one of these channels that they lost. So, here's the reality. There is no trend here. There's no trend here. And if there's no trend, you range trade. Meaning, the lower you get to this line and this line, the more it's a buy. And the more you get to these two lines, the more it's a sell. And this downtrend that will likely get hit this week. So, if you're looking to day trade things, and that's not my cup of tea, you'd say, well, there's a 4% move that's likely to come this week. Just capture the 10, capture the 5, PPO curling up, ADX not confirming, just to be clear. And we are looking for that right shoulder, right, which was called out. We saw this one coming. But the reality, look, we got the momentum flipped up, histogram's positive, can definitely roll from here. But the reality is a long-term downtrend, and you're going sideways. So if you're a day trader, then yeah, you're getting excited about this. If you're a swing trader, this isn't even on the radar yet. If you're someone chasing momentum, this is 6 months from being a buy. Let's take a look at TNX. Okay, recaptured all the moving averages on the weekly. PPO still negative, heading to 0. Anything above 0 is a high or low, but you do have this coil taking place, right? And so this thing can technically come all the way down here. And until she either curls and crosses up or sets a new all-time high, it's a sell every rally in my book. And it's awfully, coincidental, can't get above this left shoulder, right? And so obviously still an ascending channel above the 40, there's nothing wrong. This isn't an uptrend. And if this isn't an uptrend, you can't buy bonds. And I know every macro guy wants you to buy bonds right now. They've been telling you to buy bonds for 6 months. Okay, and this time they might be right. They might be. This, though, is still in an uptrend. And until it breaks this blue line, we can't buy bonds. I know 111, you can accumulate and stuff like that. But I'm going to show you some charts that have doubled in the last month or two. And these names that have doubled are where you outperform. You don't outperform in a name that's going sideways. So if we look at some of the names that are outperforming, it's the same usual suspects every time TNX rallies, right? Because when TNX is rallying, like she has been since August 1, you tend to get all the names, like the commodity ETF since August 1, up 10%. XLE since August 1, 21%. Individual names since August, what's this, 5th, 40%. Right, but you should have been buying bonds, right? Which have gone nowhere. Now we're approaching the sell zone. This is no doubt, this is a sell, all right? And if they get above this, then look for something like this, and then a rally up here to this red line. So we'll see what happens. I'm still unclear on the energy thing. I don't know. Was July the top? I don't know. And I don't have to know. That's the most important thing. Everyone wants to know and make the claim for everything. I can tell you this is still in an ascending channel, and that the risk is that she comes back down to $80. And if you look at the monthly, this candle here is a problem, right? This is the problem. And until she gets above 105.57, you should be selling every rally. That's what this candle tells me. Get above 157, we got to rally to 120. But as you can tell, it's at the end of the run, right? There's a phrase, you don't chase the first 10%, right? This move here, the first 10%. Why not chase that? Because you're going to sit through a 50% decline. Same thing up here. Why not chase this? Because you could be at the start of something like that. So what does this mean? It means wait for this impulsive move, buy the retrace as close to risk as possible, knowing where you're wrong, and look for the middle part of the move. And in this instance, I traded this. I thought 110% was good. And we never really got a pullback. But the reality is, this is why I love this 510. The 510 cross is still bull. It's still bull. If you just sat back and said, look, I got a 510 bull cross on the monthly. I'm going to sit back until I close below the 10. I close below the 10. What is so hard about that? It's not that complicated. You just can't stare at the screen all day. Right? So either way, I mean, energy's been a place to be. All right? Where should you have not been? You shouldn't have had all your money in ARK. I hope you didn't. Right? It's basically done nothing. Again, it's the same TLT story. Right? It's just done nothing. And if you're going sideways, you're losing. Now, is this story over? I mean, no, I'm sure it's a buy down here somewhere, and I'm sure you'll get a hell of a rally. But there's no momentum here. There's nothing to play here. There's nothing to do. I mean, as if you've been watching these videos, you know, ENPH, I love this name. ADX is rolling down. Histogram's rolling down. This thing is about over. Now, captured the 5, still got that nice 510 separation, but could fall back to 222 before doing the next bit higher. Right? Now, let's call it 230. So you have to be willing to tolerate another 10 to 20% of downside risk. And if you had bought somewhere back here and you sold half up here, which is what I did, then you're okay tolerating a little bit of risk while this weekly trend plays out. That's how I trade. If you don't like that, then I can't help you. If you don't want to look to buy weakness, then watch for momentum to flip up and then ride the trend until it's dead. I can't help you. You want to day trade? It's not for me. You like options? Not for me. Right? I want to see, and look, I mean, here's the funny thing. And this is what's so funny. Even if you just participated here in July, 80%, even if you just participated on the breakaway gap, you had a 20% opportunity. 20%. So, I mean, it's everywhere. And this is going to blow people's minds. Even if you take the crappiest names in the market, the CGCs, the CRISPRs, this name looks to be bottoming. And if I just played this going back to July instead of bonds, I'd be up. So again, you have to be able to spot what's moving and track it and not care what it is and ride it until it stops moving. And here's a great example with Riot. We had all the cells fired right here, all of them. And you could have got in at any point and had fun with this trade. But you got to know when to get out. You got to know when. Now it's for the next setup. Now we're looking to buy the weakness, right? Where 650, this big orange line, even if I didn't have the fibs, the point of control, the big level right here is the buy. And if that's not it, we'd look down here at $6. Again, but the point is that you don't have to be in this trade right now. You saw this move again, while everyone was buying bonds, you missed a chance to ride. Just again, dude, just ride the 510 bull cross. Until when? Until right here when it stops. That would have popped you in right here and got you out right here. No guessing needed. 81% gain. Now we're waiting for the next setup. I don't need to watch and figure out what the Fed's doing and all that other stuff. Not necessary. So we're going to end this one here with a couple charts. The SPY versus TLT. This is definitely one to watch. All right. Double top setup. So bonds could definitely take the reins all the way back to 320. So another week or two. But if you look at the weekly, okay, this could be a big problem for the equity bulls. Now the macro guys have been calling for bonds basically since here. This whole time frame. And they might be right here. They might be right now. Why? Because there's a technical setup, a technical topping pattern that can confirm their thesis. Without the technical topping pattern or technical bottoming pattern, if you're trying to buy bonds, right? It's just an idea, and everyone has ideas, and none of them, smart people have ideas that are dumb, and dumb people have ideas that are dumb. It doesn't matter how smart you think you are or what macro thesis you're coming from. If the technical pattern does not confirm what you believe, you're a lot dumber than you think for continuing to believe it. It's not our job to make bold predictions, without any evidence to support them. You need the technical evidence to support the play. And if you go look here, what I was talking about earlier in the video is when TNX is at the top of this chart, you tend to get rallies from XLE, DBC, and KWeb. And the things that get hurt the most are the things with the highest PEs and the things that generally are memes, like PLTR, NVIDIA, Monster, CRISPR, all the SMH, ARK correlated assets. And if you go back again, so August is just month 2 in the quarter. If we go back to the beginning of Q3, where's TNX? Right, TNX is flat on the quarter. Okay, and what's winning on the quarter? Well, I hate to break it to everyone if they hadn't figured this out already. In Q3, if your money's been in cash, you're underperforming the leaders by 50%. And who are the leaders? It's Crocs and ENPH. And who are they? Those are the same leaders for SPY and IWM for the last 5 years. You can go look at it. So the names that have been underperforming, like I've been telling you, the SMHs, right? The QQQs, that's the NVIDIAs, the AMDs, the Teslas. Those names have done nothing in Q2. ARK, they've done nothing. The names that are outperforming are all SPY, IWM, correlated assets. Where's DBC on the quarter? Where's XLE on the quarter? They're flat. 15% for XLE. DBC's flat. Right? So you have to look at this from context. Now you want to say, well, where are we on the year? And now we can start to cherry pick all these different things to fit my bias. I'm not trading a yearly chart. I trade daily charts and weekly charts. So I don't care what the yearly chart is saying. Right? Those just confirm the bias. Okay? So the idea is to try to be as objective as we can and have an open mind about what the data is saying. And right now, the AAII surveys, they come out every Wednesday. August was a pretty bullish month. coming off of historical lows in bull bear sentiment, favoring the bears. And we, after this past week, by Wednesday, had already got back to the lows and a new low for the month of August. And then come Friday, I know they all capitulated. So the bears are extremely loud again, and technically nothing's changed. Still can be a wave 4, still can be a new impulse move higher. The bull thesis is still on the table. And why would I take the bear thesis knowing that the job of the market is to frustrate the most people possible? Right? If the crowd is the most people, and the crowd is very loud and very bearish, why would I take that take? Especially when these trends on the weekly charts just flipped long. And this is the first dip after those signals fired. Now, could they all be bull traps? Absolutely. But am I going to sit here and just pretend that every signal that's bull is actually bear and everything that's bear is actually bull? No. I understand that there's a high false positive. I understand that I'm right 4 out of 10. But I recognize that what it looks like when it's right, what it looks like when it's wrong, and what the implications are statistically when it's right. I may be right 4 out of 10, but when I'm right, each win's about an 80% win. And the hold time's about 4 months. You see what I'm saying? So if we're on week 6 of the rally, and this is the first pullback, into a rising 10, into a rising 40, that is typically for buying. All right, if you like the content, like the video, subscribe to the channel, and we'll see you next week.